All right, our first little question from Soren. So Soren asks, "Hey Nick, I'm having a hard time with adding to the winners. How often do you get price go against you, reach the stop loss of the first positions, to then instantly go back to where it was? Because I think out of 10 attempts, one has worked for me. The other 9 times, price returns to take out my initial position, followed by price continuing to the profit target, frustratingly enough. I usually go in to add somewhere from 10 to 15 pips. At this point in time, I feel like it's super random if the position I just added will work out or not, with the incline of not working out. One thing I have not tried so far is to add to the trade when the candle closes. So here's the way I approach that, Soren. Everything has to be contextualized. So, for example, let's say on the 1 hour, right? We have a super simple setup. Price breaks and retests a support resistance zone, or it's in maybe a downtrend, it's fucking pulled back, downwards market structure, whatever. You think on the 1 hour, it's going to move from here down to here. So you're like, sweet. I like to get into that trade, but I'd like to participate it in a way. Hey, Mandrix. Hey, Mandrix. Hey, hey, hey. Just gonna mute you, bro. Okay, cool. So you get into this trade. This is on the 1 hour. All right, sweet. So now we're just gonna zoom in here to, like, I don't know, the 5 minute or something. And on the 5 minute, this is maybe looks like that. So it starts to bounce there at the resistance zone, right? So this is like zooming into that right there. Zooming into that, this is what it looks like on the 5 minute. So here on the 5 minute, you're looking at it and it starts to kind of go sideways. So maybe you start your first position. Okay, cool. So you start your first position, a Soren, you get it all set up nice and pretty. Stop somewhere up there. Target's going to be like way the fuck down here, right? Because the previous move was up here. And then here's how I approach the adding. Not only must the first position be in profit whenever I'm adding into something like this, and the context is a million different ways, so I don't want to hear anyone throw a bitch fit if I do something different in the future. Everything is contextual based. Just using this as a rule of thumb to help you dictate actual trading decisions, to track and then figure out whatever the fuck works best for you, right? So full disclaimer, take this all with a grain of salt. This is just to help you learn the initial concept. Then you test it going live. So you start a position here, and then after it moves into profit, you want to get into another position. If it just does that, I typically, in most cases, usually, generally, as a rule of thumb / guideline that is not set in stone, generally, I would not add to a position like that as if it just goes into profit. However, what I'll do is if it goes into profit, we got a nice push, and comes back, it starts to test here and starts to bounce. So now you've got this little shit of like some lower highs forming. It's breaking and retesting the support zone and turning into a resistance on this lower time frame. And then it's starting to tug away. And then like something like that, that would make more sense to add to, because then you can bring your stop to break even for that one. And this one right here still makes sense, because if it's going to go and continue down, it's probably not going to break out of this pattern of lower highs. So even if it does some bullshit like this where it pushes up, right, you're still unlikely to take a stop out on that first position. But even if you do, it's still like at the resistance zone, right? And your stop is still like above these highs. So it's still fine to be in the trade. So you get into a trade. Ideally, what you want is for price to just start lurching in a profit. So if it starts going into more profit, the 5 minute chart, 15-minute chart, whatever, is going to be doing the same shit as the hourly and the 4 hour and the daily chart. If you are right, all you have to do is just watch a little bit more closely. If the 5 minute makes like a new lower low, and then it starts to pull back and then top out, and then it starts looking like it's going to go down, well, cool, bro. No, put that position to break even, your second position. So the first one was already there. You'll put your second position to break even, and then you'll add your third position. In your third position, wherever you think it's likely to turn around. And then now this high will be your new reference point. So as long as this beautiful little 5 minute structure of lower highs and lower lows does not break out, you're good right here, bro. It's a 1 unit of risk. But if it happens to work out, and on the bigger time frame, if you get a huge fucking move on the 1 hour, 4 hour, even to just the previous low, you end up making goobers of money, bro. You end up being a goofy goober because you've made so much money. So let me know. Okay, well, apparently it makes sense because you typed, holy shit, that makes sense. So yeah, the ultimate, if I could just phrase this real simple, it has to be it has to make contextualized sense whenever you opt to add a position. It should not be done just like, oh shit, this 15 pips in profit, brother. Let's add, man, all in. I don't think that's the best way to approach it. Maybe I'm wrong, but I think it works better if you're like, okay, well, if this is going to work out, it's going to make the little lower low, and that's good. It'll be in profit, but it would be better if I waited for a pullback and then actually waited for that pullback to make a lower high and then that go into profit. Then you have a new structure like lower high right here, and it shouldn't break past that if the downtrend is going to continue. Then you have everything kind of aligning in your favor, and you're executing it with controlled risk, and it fucking makes sense because you're adding after you think it's not likely to break those highs. I don't think it's the best to just add because of like, oh shit, bro, it's in profit, man. I'm gonna add. So you can click and then boom, back out at break even, then it runs back to the target. You're like, fuck. Just wait for the little pullback first in the lower time frame. And understand it's not gonna crack past the previous highs if you're gonna be right when you're scaling in. So let's see. Mark says, how much data do you think is reasonable to collect before live trading? Mark, I think that it's all subjective and dynamic. So here's the way I look at it. Whenever you have been profitable for a couple months in demo, I think it's worth a shot as non-financial advice and a generalized suggestion for educational purposes only. Most traders lose money. I think it's reasonable to maybe start a small live account if you've been profitable a couple months in demo. Starting a small live account with like just a small amount of your trading capital just to piss around with, and then just like trade that. And if you could do that profitably for like a month or two, put a little bit more in. And then if you can do that profitably for a month or two, this way you're just kind of you're easing into it in a very slow, predictable, iterative process of starting small, building up your skill, and then as your confidence level increases, your capital traded that you have allocated to trade with and your risk tolerance increases, which makes sense because I think it's perfectly fine to have a higher risk tolerance as you get better trading. That's how I would ease into it. I would not look at black and white metrics like, mate, you have to have 500 trades before going to trade live. That's just it. That's all you got, 500 fucking trades. And then you're going to be sitting there for 3 years waiting for 500 trades, bro. So yeah, just you'll know when you're ready is essentially the answer.
The reason I asked, Nick, is because I'm doing like back testing, and I've done around, a fair amount, like 450, 500 trades back testing. That's fine. But you think 2 or 3 months demo live trading then is more useful? Yeah, I guess it is, isn't it, in terms of taking trades in the moment?
Yeah, if you look at the stats, there's something like, I don't know how true this is, but there's something along the lines of a saying that goes like 90% of traders lose 90% of their trading account they start within 90 days of starting the account.
Yeah.
So some shit like that, right? I don't know if that's the exact metric, but overall, I think if you can survive 3 months, not only not losing money, if you can break even after that, I would give you a virtual pat on the back and then a grapefruit flavored LaCroix sparkling water as just a token of my appreciation for not being a complete fuck up. If you could just go 3 months breaking even, if you can actually generate a profit, even if it's on demo, most people can't even fucking do that with controlled risk. If everything's relatively predictable, meaning you know how you got there, you're like, yeah, I looked for support resistant zones. I took sells at resistance, buys at support, and then I tried to use a little bit of my discretion to either stay in trades if I thought they were going to work, or if it started looking like it's not going to work, then I exited early. If you're doing stuff like that and learning, then yeah, I think you're fine. But yeah, I think most people will know when they're ready because objectively, you'll look at your P&L and it will say you made $669 over the course of the last 3 months. That's great. So you can start an account with $420 and then you can just trade from there.
Okay. Sounds good, man. Thank you for that.
So I hope you guys have a wonderful rest of the day. I enjoyed hanging out here on this call, and I think the most fun part of this call, Blair, was having you here, man. Just seeing you there with your headphones and your hair spiked up, that really made my whole fucking day, bro. I don't know what I'd do if it weren't for you, so I appreciate you being here. Great.